Hi everyone, in this video I'm going to consider two EV stocks, Chinese EV stocks, and determine which one is a better buy, Li Auto or Xpeng. So let's look at them, consider them across several different metrics and determine which one is the better buy. Of course, here's a price chart of both companies for 2022. Li Auto saw its stock price fall 36.5%, whereas Xpeng stock fell by 80%. So it experienced a much bigger decline than Li Auto, but that alone doesn't make it a better buy. So let's look at some more metrics, starting with quarterly year-over-year revenue growth. And it's alarmingly similar with Xpeng and Li Auto. You could see both of them exploding, and then revenue growth has been falling, and all very similar in its most recent quarter. 12.8% revenue growth for Xpeng and 13.6% growth for Li Auto. So both of them experiencing a slowdown in revenue growth as they've started to ramp up production, and they're not comparing with previous year figures that were incredibly low. They've now, gotten to a level where their previous year figures were already quite high. All right, so let's move on. Let's look at their gross profit margin. And interestingly, Xpeng has been increasing its gross profit margin steadily, which I really like to see when I'm looking at any company, but especially for a manufacturing company. I love to see expanding gross profit margins as revenue is growing. It demonstrates to me that the company is achieving economies in scale. It's making progress in on the learning curve. It's getting better at what it's doing, right? Which I expect to see. If you've been doing something for a year, for 2 years, I expect you to get better at that, right? I expect you to be better in your second year than you were in your first year, and I want to see evidence of that in your financial metrics. And I'm seeing that for Xpeng. I'm seeing that growth here, gross profit margin growing to 13.53%, edging out Li Auto, which is not showing that same kind of acceleration. It's actually plateaued, and its gross profit margin is falling to 12.65% in its most recent quarter. So a big advantage to Xpeng here, not just because it's got a better gross profit margin, but because of the trend of the gross profit margin. It's showing continuous improvement, which is one of the favorite things I like to look for an investment. The next thing I want to look at is operating income, and unfortunately, neither of the two companies is delivering the same kind of expanding uh, economies in scale demonstrated in gross profit margin in the operating income line. Each of them are losing a lot of money on the bottom line. Xpeng losing 317 million, while Li Auto lost 311 million in its most recent quarter. Both of them on a downward trend. Li Auto's downward trend looking more alarming than Xpeng's. So both of them get a poor grade in this regard, but if I had to give the advantage to one of the two, I would give it to Xpeng here because its decline is more steady, whereas this fall off looks a little bit more alarming from Li Auto. Next, let's look at cash flow from operations, and again, Li Auto was showing a very nice trend before its recent few quarters. It was exponentially growing its cash flow from operations over 400 million in one quarter, but now falling down to 89.9 million negative in its most recent quarter, where Xpeng was never delivering positive cash flow from operations and losing 345 million in its most recent quarter. Again, both of these companies are relatively new, developing a relatively new technology in electric vehicle sales, and so you would expect some kind of growing pains. But I would just like to see more of what I was seeing here from Li Auto, that kind of growth. Uh, so for these two, if I was to give an advantage, I would give the advantage to Li Auto here because it demonstrated it could achieve this kind of growth, and the most recent quarters declines, it may be able to recover from that and revert to its longer term growth trajectory. Finally, let's look at shareholder dilution. Let's look at average shares outstanding. So when these companies do eventually become profitable, how much have they diluted shareholders? And looking back here, Li Auto has gone from a little over 500 million shares to 976 million shares outstanding. So really big shareholder dilution, whereas Xpeng not so much. It started out above 750 million, has about 860 million shares outstanding, so not very much shareholder dilution. The advantage goes to Xpeng here. All right, so the final thing, let's look at valuation to determine which one is the better buy. And since both of them are not, since each of them is not profitable on the bottom line or generating consistent cash flow from operations, I chose to use the price to sales ratio. And comparing them on this metric shows that Li Auto is selling at a 3.698, whereas Xpeng is at 1.837. So Li Auto is trading at more than twice the valuation of Xpeng in terms of price to sales. So I would give advantage here to Xpeng. Is trading at nearly half the price of Li Auto. So given the better valuation and given the expanding gross profit margins, and just given that Xpeng is selling the lower priced, I like the SUV. Xpeng has the lower price competitor to the X5, and the fact that it has one of the fastest charging stations network that exists. And I think one of the pain points in EV adoption is that long time to charge, right? In a gas station, you fill up your car in less than 5 minutes, whereas some EV stations could take you up to 30 minutes or 45 minutes to charge your car. So I think faster charging is a prime selling point. So I think I would give the advantage to Xpeng, and I would say Xpeng is the better EV stock to buy here. All right, that's all I've got for this video. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.